compared to your friend that's inviting you to be a part owner in his business. Your friend who might be really, really good at what he does may not have a track record yet. The company might be small. It might not even survive the next 10 years. In the stock market, you have the giants like Apple, Microsoft. In the Philippines, you have Ayala Corporation. You have the Jollibees of the world. You have a ton of large companies that have done well over a long period of time. Hey guys, so in this video, I want to give you the basics of investing in the stock market. I know I've made some videos about this in the past, but when you invest in the stock market, you have to look at it from a business perspective. What do I mean by looking at it from a business perspective? Companies, they all want to grow, and part of the ways on how they can grow and expand is by raising capital. They raise capital by borrowing money. They go into debt, and as they go into debt, whoever would lend them money gets paid interest, and that's what you call bonds. Companies raise money via bonds, and those who hold the bonds or own the bonds get to receive interest over a stretch period of time. However, companies can keep on borrowing also, because no one would want to lend money to a company that's massively in debt. And that's why one of the ways for them also to be able to own or to be able to raise money is by selling pieces of the company or by selling shares of the company. So think about it this way. Have you ever had a friend that came to you and said that, okay, let's start our own food cart business, and then give me money, I'll give you X amount of ownership in that business. I'll run everything, I'll do everything, but since you are a part owner of the business, you get to take part of the growth of the company as well. And that's what the stock market is also. It would be them selling bits and pieces of ownership in the company and selling them to the broad market. And what's nice though about the stock market is this: as compared to your friend that's inviting you to be a part owner in his business, your friend who might be really, really good at what he does may not have a track record yet. The company might be small. It might not even survive the next 10 years. In the stock market, you have the giants like Apple, Microsoft. In the Philippines, you have Ayala Corporation. You have the Jollibees of the world. You have a ton of large companies that have done well over a long period of time, which they had track records already spread across different recessions, different types of uncertainty in the country, but they have gone out and they have really, really done well. So that's what investing in the stock market is. It's not just you putting in money and being part of the company, but it's you also having the chance to be able to be a part owner of the largest companies in the Philippines if you want to invest in the Philippine stock market, or in the US markets, or even global markets if you want to invest overseas. It's basically leverage because it gives you the ability to either focus on your job or focus on your business, and you have an asset class that's working hard for you. You get to diversify in businesses and industries that you don't have any exposure in. Like if you're working in a telecom company, you can invest in, say, Meralco, and be diversified that way also, that you have exposure into power. Or you can also be diversified into supermarkets and groceries like Pure Gold, or you can also enter fast food chains or casual dining restaurants like Jollibee, Max, and Shakey's as well. So there's a lot of options on how you can actually enter. And what's interesting about the stock market is that you don't need a large amount of money to be able to start. It would take you 25 million, 30 million upwards for you to be able to be a franchise owner. If you start investing in the stock of Jollibee, say you buy 10 shares of Jollibee, it allows you to become a shareholder of Jollibee already. 10 shares of Jollibee, if the stock price is around 230 pesos, 10 times 230, it's only 2,300 pesos. The amount that you need to be able to start investing in Jollibee versus you franchising a Jollibee business is very, very small. So you don't need a large amount of money to actually start. If you go the global route, they have fractionalized shares, meaning you don't even have to buy one whole share for you to be able to start investing in the stock market. That's what's amazing. The minimum that I've seen, the lowest that I've seen, is for $1. You get to start buying shares of the biggest companies in the world, from Apple to Microsoft to Google to Amazon to P&G to Unilever, and so much more. And that's what makes it so fascinating, because since everything is online, you could do it from the comforts of your home, or you can do it in transit, or you can do it also when you are relaxing, also wherever you are in the world. How do you open? You need to have a platform. In the Philippines, there are registered platforms in the Philippine Stock Exchange website that you can check out. But as long as they're online, I think that makes it easier also for you. The same way also for global stocks, that you get to open them by just using an app. You get to trade at your own time and at your own pace. So what's better? In my opinion, it's nice to have both because it gives you instant diversification, that you're not just exposed into one country. You have different countries that spreads across your capital, that spreads across what you have as well. What's the risk also if you start investing? Every time you buy stocks, you become part owner of the company. If the company does not do well, file for bankruptcy, or they really don't perform, you're also part of that. You become a part owner of a company that's not performing or not doing well, or if worst case they close down, you end up being a owner of a company that went bankrupt, which is not good in general context and aspects. And also, if there's negative sentiment, it would also affect the stock price of the company that you're buying. The shares are now in the market, and it's the market which is pretty much driven by supply and demand that will drive the price. If there's negative sentiment, it causes more sellers to sell. It prevents people, because of fear, from buying higher. And if people are not buying higher, it causes sellers to dominate. And as sellers dominate, it brings prices down. So always remember that when a stock that you're watching is already in the market, the price is not controlled by the company itself, but over the short term, sentiment plays a very, very big role into it. Because if the company is good over the long term, it should outperform. If there are any short-term dips, then it could also become a buying opportunity, because you get good opportunities to buy companies that are performing well every time there are short-term dips, or every time people are negative about it over the short term. One way to be able to be good at it is to just focus on companies that give out dividends. Dividends come out from their profits, that they're earning money. They have more than enough for their expenses. They have more than enough also for their expansion, but they have more that they can give out to their investors as part of their profits. And I think that's something very good if you are an investor, because you're not just waiting for the price to go up, but you get a piece of the revenue of the company. And one shortcut that you could actually look at, that if they have dividends, that means they're earning, they have surplus. And won't you want to be invested in a company that's earning and also have surplus as well? Stock market makes you a part owner, that you take part of the success and also in part the failures of the company that you're invested in, that it allows you also to be able to do it wherever you are in the world, and it allows you also to do it at minimum amounts as compared to starting your own business or getting into a franchise as well. So there, I'll put playlists down below of some of the videos that I created about it, and if you guys have any questions, put them down below as well, and I'll try to make more videos about that. And if you stayed up until the end, like, share, subscribe, smash the bell so you get updated every time I come up with new content about investing. So that's it for now. Marvin Gurmo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all. Sama ka sa last outro part. Say hello to everyone. Say peace out.